Hello Internet, welcome to my channel. Today we are discussing Starbucks and if it should be part of your portfolio. Before we get started, as always, subscribe, like, comment below. Please give me your feedback as well as any questions you may have. The CEO of Starbucks, Kevin Johnson, assumed the role in April of 2017. Mr. Johnson held previous roles with Microsoft as well as government appointments both in advisory and leadership positions. He has echoed Starbucks' aim to grow its footprint from 26,000 stores to roughly 37,000 by 2021, with a good amount of this growth happening internationally. If we were to look at the ratios, the PE ratio currently sits at 27.4. This is slightly above the industry average. Its price to earnings growth and its price to book are currently well above the averages, with the price to book being 13.5, absolutely eclipsing the average of the industry. In the bottom left corner, I show past earnings. Starbucks typically averages roughly 19.3 year-over-year earnings growth. This year, however, they have shown just a 9.8% growth, while the industry averaged a 39.8% growth. A good part of this is the fact that Starbucks has such a large market cap, but this accentuates the differences in companies within the same sector. A positive takeaway in the bottom right is the return on equity, assets, and capital, all of which were at or well above the industry averages. Here is a look at the revenues over time. The net profit margin of Starbucks currently sits at 12.93. This is absolutely phenomenal and puts Starbucks in the top 12% of the industry, which has just a 3.19% net profit margin. If we were to look at debt versus net equity, we would see the debt has been growing since 2013. This is in part due to the aggressive expansion we referenced earlier, but is an important thing to note as an investor. When we talk about the dividend, we should first talk about the other companies and where they fall. You can see market caps versus dividend yields on the right, and the historical dividend for Starbucks in the top left. Currently sitting at a 1.84% with a payout ratio of 50%, this dividend falls slightly below the industry average and well above the industry median for payout ratio. We can see in the bottom left, a year ago, insiders were selling off. Recently, insiders have been purchasing. So there is some internal optimism for the company. Analysts currently see this as an overvalued stock at $54.50, with a future cash flow value of roughly $40. We can see a range of estimates, quite narrow and historically quite accurate, showing EPS growing over time, but again, this just doubles down on the fact that the stock may currently be overvalued, considering that the earnings are all comfortably expected to rise. With a 52-week range of between 50.84 and 64.87, we can see the stock slightly below the halfway point of that range, but again, this is dependent on where you think the basement should be. Some final thoughts on Starbucks. The current share price indicates a high level of optimism, to say the least. My questions for this optimism would be A, is this sustainable going forward? And B, will the company be as successful internationally as the stock price assumes? One other call out would be the market saturation versus net profit margin. The company has challenged itself to aggressively expand into new markets, but this will come with challenges the price may not currently compensate for. Some examples of this would be demand for product, workforce itself, as well as the HR and logistical costs and how they compare to what Starbucks is used to paying. One last thing to call out here in final thoughts. At its current price, the stock is neither a value stock nor a strong dividend payer, in my opinion. I personally found it hard to classify it either way and would be hesitant to invest in this as a short-term investor. As a long-term investor, I could find other companies in this same sector with more immediate upward mobility. As a disclaimer, Starbucks is not currently part of my portfolio, and I don't necessarily plan on placing it in there anytime soon. Please subscribe, like, comment below. I would absolutely appreciate you joining the club, and I can't wait to provide another stock for you in the future. Thank you.